thank you everybody for joining us today. We're doing another video from our Accountability and Action series. We have with us today Jason Waldo, who's a senior consultant at the Alera Group. And we're going to talk about health insurance, which obviously impacts the vast majority of anybody that would be watching as you're trying to incentivize your employees to work with you, but also as you're trying to contain those costs. Jason, if you don't mind, maybe tell us a little bit more about yourself.
Great, sure, happy to do so. I mean, like so many people out there, when I was a kid, I grew up dreaming of being an insurance agent. No, but actually more commonly, so many of us kind of fall backwards into it. And I was actually a chemist for a while and then fell backwards into insurance. And I really enjoy what I do. Get to help employer groups with their insurance programs and add a lot of value to them, help impact the team members that they support with those benefits. And it's really rewarding. Every day is different. And I'm not sure if you know, but the healthcare industry is pretty messed up. So we've got plenty of things to do to help and provide solutions to folks. So it's been a rewarding thing to do.
No doubt about it. It's something that businesses struggle with. You know, they have a benefit that they want to provide to their employees, but finding a good one that is beneficial and amicable to both sides can be a challenge.
Absolutely. Yeah. So for the last 11 years or so, been focused primarily on health insurance. We help and consult on all the types of employee benefits, but since healthcare is so challenging, like that's the one that soaks up the majority of our time.
No, that makes sense. Well, to piggyback up of that, can you tell us a little bit, what is the environment of the health insurance world? What are you seeing now these days?
Yeah, so most health insurance programs have two main components. They've got the medical side and they've got the prescription drug side. So in the medical side of things, you continue to see consolidation of private practice groups. You know, I don't know the exact statistic, but maybe as much as 90% of primary care doctors are owned by hospitals. Maybe it's higher than that in any particular market, but most people are familiar with, oh yeah, my doctor's owned by the local acute care hospital.
Right.
And they're not really doing that for the revenue generation of the primary care. They're doing it for the referral patterns into the local healthcare system. And so they're referring in for MRIs and imaging and for the large surgeries and things like that. And while the quality is sometimes there, it's not always there, but the cost is always considerably higher than some of the other avenues in our healthcare system. So really, like on the medical side, things are gelling up to be where you sort of got the primary care aligned as the sales force for the mothership hospital. And, you know, we've seen that that's driving costs continually up. On the other side of that, on pharmacy, recently the gene therapy meds that are coming out are staggering. They're brilliant and amazing solutions for people who need them. They cure diseases. There's a new one out that is looking to be a cure for hemophilia B, which is awesome, and it's going to be life-altering for people. And yet at the same side, we're trying to finance these things, and the price tag on that is over $3 million. So, you know, that hits a self-funded health plan or even a fully insured health plan, and it's going to cause a lot of issues.
There'll be a ripple effect.
Yeah, absolutely. So, yeah, that's the environment we're in these days. The severity of claims is continuing to go up, as well as the frequency is still going up.
So going forward from that, what's an interesting statistic that our viewers might find relating to health insurance and health benefits?
Yeah, I would say, I can't put an exact statistic to this, but more and more employer groups are looking to roll up their sleeves and self-fund their health insurance program.
Okay.
Almost 100% of Fortune 500 companies, if not 100%, are self-funded. And really, in our experience, if you got more than 100 employees on your plan, you're probably already self-funded, but certainly above 250 employees. But now there's products that come down to just as few as 2 employees, you can get into a self-funded environment. Although 25 is probably where it's more comfortable.
I mean, if my perception would be self-funded health insurance is not new. It's been around probably for decades when it comes down to it. But practically speaking, it continues to evolve. It continues to be appealing to businesses that are using it. And there continues to be opportunities for that.
Yeah. The realization is that whether you're still on a fully funded, fully insured plan, or you're in some sort of level funded derivative, self-insured plan, whatever, it's really not insurance anymore. It's more like a banking finance line of credit relationship with your claims payer. Because no matter what happens, each year they come to you and they say, well, you used more, so your prices have to go up. And then you use more the next year and the prices go up. It's not like other types of insurance where you might not use the plan in a given year. Your health insurance plan, people are using it and they're using it frequently. So it's more of a banking relationship. And so we tell clients all the time, you don't really have an insurance problem, you have a claims problem.
Fair.
Because it's the underlying claims that are ultimately driving the prices that they want to charge you if you're fully insured, or if you're building a self-funded plan. It's the cost of your team members going out and procuring medical care that's really ultimately driving what you pay.
Well, that makes sense. So along those lines, what challenges are you seeing businesses run into, employers run into as they try to navigate that world?
Yeah, well, what's interesting is like, and to your audience, you probably talk to them about accountability on cost controls and other things in their business. You might have to have 2 signatures on a check that's some threshold, or those types of cost controls. But then here on our health insurance plan, we give our team members something that's ironically shaped exactly like a credit card. They carry it in their wallet right next to their credit card, and they get to flash it around the community in the healthcare system with very little checks and balances on how they spend. They don't have good visibility into what the quality of things are or what they're going to cost before whatever the procedure is. And then it's vicariously linked to the corporate bank account, either through an insurance premium that could go up every year, or through a self-funded plan where it literally is in your weekly claim fund tied to your bank account. And there's no second signature needed on a procedure. And so just, the system is aligned in a way that it's stacked against the self-funded or even the fully insured employer to provide the information that someone needs to make good consumer decisions.
So along those lines, is there anything that you're seeing employers do that helps them offset that reality, or help them maybe educate their employees about the implications of having a company credit card without really any restrictions?
Yeah, Ben, great question. I mean, the first realization is that, like I said before, some of the same business savvy that you're using in other areas of your business can be applied to the healthcare supply chain. And it's really having that mindset of looking at it as it's part of the supply chain. The healthcare industry that's around us in our community is like a vendor for employer groups. You're offering them a benefit plan so you can attract and retain great workers. They can stay healthy and they can not worry about these things. And so in doing so, you're procuring healthcare as though it's like a raw material for your business, right? So it's then looking at that as part of the supply chain and managing it similarly to how you would do other things. So not being content with double-digit increases on that, because if there was somewhere else, if your raw materials were going up like that, you'd be doing things to press back on it. And when we get onto a self-funded plan, we have some open architecture to do those things. And to roll up our sleeves and say, all right, let's figure out how we can win at this. It's not easy. It takes extra time and energy, but it is absolutely worth doing, and you can press back on it. So to be more specific to your question, an example would be direct contracting. There are opportunities out in the market to circumvent the traditional insurance program and work directly with a healthcare provider that would prefer to take essentially cash payments for procedures, rather than running it through insurance. And so we're finding that that's able to reduce costs 20-40% on, say, a hip replacement or something like that. There's ways in the pharmacy side to source things through alternate channels. It's really, again, though, just taking some of those ideas that you might apply to finding better prices on raw material and weaving them into your benefit design in a way that creates a win-win for you and the team member. Because people don't want to be told where they need to go for things, but you can align things in a way that is to their benefit at the same time. Still high quality, but let's get a fair value and let's give them a good incentive for doing that.
But I guess the next question would be, is there anything else new out there that you're seeing businesses take, employers take to try to come up with a solution to the rising cost problem?
So depending on who you'd consult, the rising cost of healthcare in general is 7 to 10% annual trend, which is another way of saying inflation on medical costs.
Okay.
But it's more like 7 to 8, 9 on medical and like 11 or 12 on pharmacy.
Okay.
So pharmacy is growing faster than medical. It's driving higher overall trend. And whereas for some customers, it might be 25 to 30% of their overall budget now, it's slated to increase to be 50% of the budget in the coming years. Fast forward that 3, 7, 10 years, it's going to continue to grow. Yep, for sure. So that's the main area we need to continue to focus on. There's a lot of smoke and mirror things that happen inside of pharmacy contracts that we need to be able to look at and solve for to drive costs out of the pharmacy side and press back on that inflation. And I do want to make a point that the health insurance companies are not really bad guys in all this. They, like I said, they need to charge enough to cover the claims that you're experiencing, and then they have to put some margin on top for their administration and their profits. So they're running a business there too. It really comes back to, it's not an insurance problem, it's a claims problem that we need to try to address.